Hey, good morning, everybody. 8 a.m. on the West Coast. Stock market's up this morning. It's a little choppy, kind of all over the place, like our political environment at the moment. We're just going to kind of get tossed in these waves in the short term while the headlines dominate everything so much. Um, Had a good day yesterday. Today we're down slightly. We did rotate out of Domino's, who then after the bell reported their earnings, which were strong, but then they also had some news. Their guidance is going to be poor when the stimulus goes away, which is why their guidance was lower. So, um, I know some of you are still holding that. Excuse me, I'm considering buying that position back. Our little small caps that we started yesterday were up to start the day. They've now turned around. We're kind of 50-50 there. DocuSign's weak today. That's what we're looking at on the downside. That's why we're down a little bit. And then we have on the upside, Tesla got a price target raise. Square continues to just steamroll higher. Um, and yeah, that's where we're at. So checking in on our balances, we have $1,100 of cash. We have uh, a little bit of a loss on the day. Looking at the markets, we're trailing all the markets by a little bit. We never want to be red when the rest of the markets are green, but happens sometimes, and it's not the end of the world. More now just looking at where we're going next and where we're going to want to put the rest of this money, and then as we trim, what are our next targets? Looking at just the names at the top, clearly a rotation into housing, which is a healthy sign. Um, there's just kind of a pickup of some of the value. The other thing with the debates is, depending on how you want to interpret it, there is a consensus or a quasi consensus that a Democratic presidential win or a blue outcome of the election will lead to capital gains taxes on stock transactions, um, which will leads me to believe that if that's the case, or as we get closer to that outcome, or if that looks more realistic to investors, there's going to be more pressure for them to sell their winners, especially these coronavirus winners that are going to be subject to short-term capital gains. They're going to take those in 2020 versus risking taking those gains in 2021. So the end of this year, there could be some tax selling for that reason. Long term, I think that's definitely a buying opportunity, and it's also a new catalyst for people to start new longer term positions in tech. So um, I think that that's a good thing, um, or something we can handle. I don't think it's going to destroy the market like they think it's going to. And then secondly, there's a call for a breakup of big tech with a lot of the Democratic brain trust. And I personally think that that is going to be for the best. I I'm not super interested in owning Google or Alphabet, but I would love to own YouTube. For example, I don't want to own Facebook, but I would own Instagram. And I think what you'll see if there is a big tech breakup, it's going to look like the end of Standard Oil and all those companies that got broken up at the end of Standard Oil, turned into Chevron and all the big American oil industry players of today. And I think you're going to see that with tech in a lot of regards. If there is a breakup, I don't think it's going to destroy value. I think it's going to unlock value. Um, so politically, I don't think it matters at the presidential level what happens with the stock market. I think the Senate races are very important, for certain industries, but overall, I think the number one overriding factor in our markets is that what we've learned and what this new generation of investors has learned is that if there's ever an issue, the Federal Reserve is going to step in and bail us out, which creates a moral hazard, but nobody cares about that. Um, so I think that's why it's a good time to own stocks, is because it sets up for a good environment for corporate interests, but then it also um, we know that there's going to be money coming down the pipe if we ever need it. So they'll just print whatever we need, and that will work until it doesn't work. Um, I think these gold bugs are going to get burned. I was really bullish on gold. Um, if you're going to own gold at $2,000 an ounce and up to, in the 1900s, you need growth to really struggle and for there to be inflation, um, or deflationary. You just need pressure that's either very inflationary or very deflationary, and that creates demand whenever people lose confidence in the currency. But what you really want when you own gold is an inflationary environment. And I think that this whole setup that we've had here is a 50-year setup in gold. It literally goes back to the end of the gold standard. And for us to get to all new highs, we're going to need a fundamental crisis that is like worse than what we saw in March. Um, and I think that we're going to return to growth before that happens. And I think that that could create not the best situation to own gold. Yeah, I don't want to own any part of that. I think that that's pretty dicey. Um, the same with silver. As quick as it came, it's going. It's underneath its 50. I think it's dicey here off this gap down. I don't want anything to do with this. So, I think the precious metals, that trade is over. Um, and I'm going to continue to stay in the high growth stuff. We're battling back to even here. We're not really doing any trading, just kind of looking at the market. We're over 45,000 for the first time consistently. Again, we started at 41.7, so we have some nice equity here that we're just sitting on, and we're closing in on 1 month since we started doing this. So this is just going to be a morning check-in. We're not going to do any trading here. What I'm really looking at when I do, a morning scan, or what's really getting hammered here, is there anything that I really believe in all the time that's getting beat up? That would be a Domino's. This is a classic example of that. But you can see that it gapped down to the 50 and now it's below that. We're going to want to see it settle on that 50 before we get back a part of this story. But again, this is a chart that I still really like. We'll probably do a chart analysis on this this weekend, just because I like how this is setting up here. But today is an ugly one for this stock. Sorry, work call in the middle of my live stream. Don't they know I'm live streaming? Come on. All right, well, enough about Domino's. Announced their quarter, blew it out by 17-18%, blew out their international by about 5%. Guidance wasn't as good. That makes sense given the environment we're in now. If there's stimulus, this is definitely one you're going to want to be a part of. The technology that they have, and this is also a food delivery company that's not being extorted by a third-party aggregator like DoorDash or Uber Eats. They collect $5.99 per delivery. That stays in-house. They pay all those fees to deliver. But they're one of the only companies that still does that. All the other ones are paying, 10, 15, 25, 30% of their ticket to their aggregator. It's crazy. So I really like them in that regard. So of all the stuff that's sold off today, and Fastly was crushing it yesterday, and even Jim Cramer was roasting people like, you can't buy this stock at this point. I agree. All right, just to wrap this up, looking at our total positions, the only thing I'm going to add, just because I'm a glutton for punishment in this stock apparently. That's not true. It's one of our good winners. But I just keep coming back to the well on DocuSign. So we'll beef that up a little bit. And we'll sit tight here. $500 cash. A little under $44,000 of stocks. one last check on the market. We're about to turn green here. Awesome. So we're coming off the bottoms in all the markets. That makes sense. Consumer discretionary is going to be a category um, that will just lag if there's no stimulus. So um, that's the category that Amazon falls into, and it's all your extra money that you have. So if people have extra money, they're going to spend it on discretionary goods. If they don't have money, they're going to spend it on staples. That's just kind of how it works um, in a nutshell. So energy, yikes, yikes. I mean, energy just can't even get out of its own way. We're seeing a total collapse of the entire energy sector. I mean, we're going towards a renewable future. And these long-term charts, I mean, they only get worse. But there's some technical patterns that I think can get studied in here for a while. So, hope you have a good rest of your Thursday. Going to check in again a little bit later just because there's so much in the news cycle on a daily basis. Um, Game plan for today is hopefully we're going to turn green here. And later today, maybe we can trim some of our top positions and spread our money out a little bit, and finish building up our micros. We're going to eventually get to about 6 or 8 small cap companies in here, and we're going to build those up by trimming some of our top positions. But we're not going to do that until we're on more solid footing here overall. So, again, have a great Thursday, and I'll talk to you guys soon.